105.7 Light FM. That'd be Pink there. I am Morning Dave. It's 8:40. 20 here before 9. Time to check in and find out how your money is doing on Wall Street. I've been catching up with the stuff that you've already heard about with Phillip Statler down at Statler Financial Services in downtown Sebring. So I gather we talked about SunTrust and BB&T on Friday, Phillip. The big news this morning that I started out with was Paul Krugman, that incredibly unbiased Nobel Prize winning economist, says, by gosh, there's going to be a recession during 2019. And anybody that doesn't know Paul Krugman, my tongue is firmly in my cheek when I say unbiased, right?
Exactly. Yeah, man. And I don't follow him a whole lot. But he's, let's face it, though, Dave, he's not the only one that's really saying that there's possibility of a recession down the road.
Absolutely. And that's one of those Mr. Obvious things. I mean, we're overdue for a recession of some sort or another, whether it's going to be mild or whether it's going to be severe, whether or not you can call that one day dip down to 20% a bull market or a correction. I mean, yeah, these terms are all things that you have to apply after the fact. So we don't know what we're in right now and probably don't. But Krugman's got some intellectual chops behind him. He did win a Nobel Prize, although he's pretty well known as being left-wing biased to the hilt. So somebody who doesn't like President Trump and the current administration, as everybody's announcing for the Democratic presidential nomination, having Krugman say, yeah, the economy's going to tank too, really shouldn't come as a monster surprise unless it comes with a cacophony of other voices.
Well, that's true. It's and that's one of those things we just have to keep weighing in on and seeing what the different economists say and what do the numbers tell us. And one of the things we talked about last week while you're on vacation, Dave, is that the numbers coming out of the government, the economic numbers, are slow because of the government shutdown. We're getting partial numbers, but not the full number yet, and they're all pushing them back till later in the quarter. So it's going to be interesting to see how, when those numbers really do start coming out, what do they tell us?
And what numbers we get tend to indicate kind of what you and I have been talking about for months, that we're still growing, but we're just not growing as fast as we were. And nothing really has belied that outlook yet from the partial figures we've gotten, has it?
No, it really hasn't. We talk about the economy and where it's going, and we don't really know until we look backwards at the numbers. And so we just have to keep an eye on it. And again, it just goes to the fact that people need to have strategies in place where they won't get hurt, especially if they're 5 to 10 years out from retirement or they are already retired, so that they don't get hurt in a major market downturn.
And that's always the advice that we repeat over and over again. World is different if you're 30 than if you're 55 or 60 years of age. That last recession took like 5 years for our investments to get back to where they were before we went into it. Between 09 and 14 and 15, we finally got up to where we were. If you're 5 years away from your retirement age, that's not a good sign to have a lot of money in equities and unliquid funds.
No, it's really not. And so that's what I really preach, is that we need to make sure we have strategies in place that are going to take care of us in a down market. And so, that's one of the main things we focus on here at Statler Financial.
Understood. We do have some indications as to what's going on, and one of them was a company that you and I both kind of learned something about earlier this morning. When we say Lowe's, everybody thinks about the home improvement company. There's a hotel chain that does the name Lowe's as well, but they've got some other interests as well, and they reported this morning, didn't they?
They did, and I really thought Lowe's, when Lowe's came out, I thought, well, it's a hotel chain. I mean, I recognize it's spelled a little bit differently, so I picked up on that. What I didn't realize is that the hotel chain is just a very small portion of their holdings. Their major business is more like oil and gas, pipelines, and those type of things. So it was really surprising to me to learn that. I didn't really, something new for me. But they came out, they missed. If you couldn't tell by the way we're talking here, they came in and they missed by 17 cents a share. Their revenue was off substantially. They actually lost money for the quarter compared to a year ago where they made money for the quarter. So not good there. They're trading down. They were trading down 11%. I'm sorry, $11 this morning.
And
Um,
I was going to say that's one of those cautionary tales as to why you and I both kind of start getting a little antsy when the price of light crude starts getting down into the low 40s. Not only is it hard to pull it out of the ground profitably, but companies like Lowe's don't do as well when crude oil goes way down. And it might be worth remembering that during the last quarter, we had one of those dips where you and I were saying, whoa, wait a minute, it's getting below the cost of extraction for domestic oil production.
well, exactly. And let me I just finally pulled up the reading in my computer, finally refreshed. It is down 11.4%, which is $5.42 before the market opens up today. So it's getting beat up pretty good there. Now, I really only have one other earning that I've been able to find on my tip sheets, and that's the Restaurant International, which is the Restaurant Brands International, which is Tim Hortons, Popeyes, Burger King. Um, they beat by a penny a share. Revenue topped their forecast. Now, they are traded on the Toronto Exchange, so we don't really have any pre-market numbers on them. But I will tell you that at their close on Friday, they were only $2.70 away or so from their 52-week high.
Cool. That's a whopper.
Yeah. There you go, Dave.
I know that Popeyes is one of the big events of the century when they opened up around here. I didn't realize they owned Popeyes, but the Burger King Horton merger a few years ago was a big thing as we ended up losing one of our national chains to a Canadian ownership. Glad they're doing well in the process. Looking at the week, I read on Friday as I was driving back into town that the week ended up as a positive, but it was kind of a lackluster day with the Dow off by a little bit, NASDAQ up fractionally, and the S&P up fractionally. Are we starting to actually trend upward again?
Well, when we look at the weeks, right? So the Dow has had 7 up weeks, and last week the Dow managed 2 up days, Monday, Tuesday, and then 3 down days. The other indexes ended up with 3 up days, if you can call Friday an up day, and then Thursday, and then 2 down days. So, but they're in positive territory year to date, which is good. One of the economists or traders that was in an article over the weekend said, "Hey, be careful of this stock bounce. It's just that it's a bounce before we see another test of the lows that we saw in December."
And there are tests that are done at every time. It needs to be said, too, while we have up weeks and we feel good about 7 up weeks in a row, Dow is still a good 1,600 away from its all-time high, so it's safely put still well into correction territory, right?
It is, yes, sir. It's definitely there. But we are seeing some green ink this morning as we come out of the weekend.
Yeah, let's quantify it now. 45 minutes before we start throwing real money around. What are we looking at so far?
So everything's pretty much green on the indexes. The Dow's up 100 points, the S&P 500 is up 9.25, and the Nasdaq's up 31. Gold and silver are both trading down about 0.75%, and crude oil is down about 0.6 to $52.40 a barrel. Now, one thing I do want to throw in there, Dave, is that Friday is a deadline. The deadline of shutting the government down again if
That's right.
Trump doesn't get a funding bill that's going to fund his wall. And so I'm a little amazed, honestly, Dave, that we're seeing green ink right now, given that a lot of what I'm seeing right now is that we're not going to get to where we need to be on Friday. And so there's a good possibility that we're going to start to see some red ink coming up here pretty soon.
I was going to say the headlines this morning are that they're currently stuck over a numeric number of immigrants that we can hold in the immigration service, and that is something that's enough of a sticking point to the point where right now conventional wisdom is that we're heading toward Armageddon's the wrong term, but at the very least a standoff on Friday one more time. Deja vu all over again, right?
Well, that's my fear. I mean, it may not happen, but you know what? Those people up there haven't learned to work together yet, so I'm not so sure that it's going to happen by Friday.
I think we need to get a bunch of second grade teachers up there to teach them some playground logic. Second grade teachers do real well settling fights among kids on playgrounds.
That may be just exactly what they need, Dave. Hey, the other thing I want to mention real quick before we go is I know people are in the middle of filing their tax returns or getting ready to file tax returns. I thought this little statistic was interesting. The average tax refunds are down 8.4%, and that's not necessarily a bad thing. It's just because of the tax cuts that came into play, and so people just got more of their money throughout the year than what they're getting at the end of the year when they file their returns.
I couldn't help chuckling, too. I saw that sidebar article this morning, and it was couched in the source that I was reading that taxpayers are honked off because their refunds are 8% lower. Wait a minute here. The smaller your refund, that means the better the tax planning job you did during the year. What gives? Why are you mad when you didn't give the government too much money for free?
Yeah, because most people, they want that big refund coming back, and that's not the best financial planning to do, but that's what people like to see.
Understood. I guess it's a surprise to some. You mentioned the futures. World markets overseas generally mixed in Asia. Japan is off this morning, but the Chinese market's mostly up. Europe is trading upward, mostly across the board over in Europe, halfway through their day. Phillip, somebody needs some specific advice. Maybe they want that big tax refund. Maybe they want an explanation as to why they aren't getting as big a one. How do I find you on the phone?
Give us a call at 382-0037. Follow us online at statlerfinancial.com, and then follow us on Facebook because we record this every morning with Dave, and we post it back on Facebook. So if you miss us one morning, you can find us on Facebook. Follow us at Statler Financial Services, and then join us every weekend for the Statler Financial Radio Show, noon on Saturdays, 10 a.m. Sunday mornings on your sister station, News Talk 730 a.m.
And back here again tomorrow morning. Phillip, thank you so very much. We'll catch you tomorrow, all right?
All right, man. Thanks, buddy.